Hello everyone, welcome back to another video on our YouTube channel. So guys, after this short delay of 3 days or 4 days, I guess it's been since I've uploaded any videos. So now today, what we are going to be looking at is that we are going to be looking at the Bank Nifty's the post-market analysis for 22nd November, which is today, and also we are going to be looking at the pre-market analysis on Bank Nifty for 23rd November, which is tomorrow, right? So let's get started now. All right. So before we are going to begin this video, we must realize that if you've been following me for a short while, then you'll be noticing that I like to do this analysis, which is something called top to down analysis. Now, what is this top to down analysis? Is that you start your analysis on a higher time frame, and then for your intraday trades or your swing trades, you use for entering your trades, you start using it in a lower time frame. Now, this is what top to down analysis means. So you analyze the overall trend on the higher time frame, and then you make sure the price action matches on the lower time frame, and then you take your trades based on the lower time frame, right? So let me go to this daily chart on Bank Nifty here. So okay, so this is it. Let me just put it in full screen, right? So this is it, boys. I mean, Bank Nifty's all-time high has been broken. You know, a short days, few days ago. Now, what happened is that after this all-time high was broken, you had this, after okay, 9th November was the first time Bank Nifty's all-time high was broken, and after this all-time high was broken, what happened is that you immediately had a small one-day retracement to the downside, which is this candle. This candle was a retracement candle. Now, this candle also, when this high got broken, the swing high got broken, and we had a nice retracement to the downside. Now, what happened is that this, these two candles, which are right here, two red candles are also retracement, which retraced till this red candle's wick, right? So this is what happened on the high time frame. Lots of days of, nearly 10 days of retracements, much of order flow, the orders were institutions either buying or selling these orders. Now, what happened here is that after this is where the real game has started on the daily time frame. So, this daily time frame, now you can notice that what happening here is that a swing low has been created, which is this one from here, and we are waiting for a swing high to be created. Now, for me, possibly in the short term, I preferably expect the market to go up on the daily time frame at least for 1 day. But that cannot be the only determining factor, which is why if you notice this RSI right here, you can look at this cursor here. This tool is known as the RSI, which is known as Relative Strength Index. Now, what this does is that this measures the strength in the market, which means you take this RSI tool, this upper side, this when this upper band. Let me just mark it for you guys. All right. Okay, so I marked it upper band. Okay, I've done it. Okay, guys, now look at this. This RSI upper band, which is this white color line light here, this thing is known as the overbought, and this below one, this white line on the beneath is known as the oversold. Now, what happens is that once the market, this RSI line, this thing, this green color line, enters RSI, which is this green color line, enters the oversold zone. I mean, for example, if RSI, enters the oversold zone, what happens is that you can expect buyers to start accumulating their prices. And if RSI simultaneously enters the overbought zone, then you can expect sellers to accumulate their orders, which is sell orders, and expect the market to move lower. Now, this is not always the case. Let me tell you, RSI works somewhat fine on the lower time frames, but on the higher time frame, you must also be looking at other confluences for taking trades based on price action. Right, because what most people do is that they buy when the RSI hits the oversold area, and they sell when the RSI hits the overbought area. Now, this can work maybe 30-40% of the time, but you need other confluences, which is known as price action confluences, in order for you to confirm that the market really is going to hit higher or lower based on the RSI. Now, this is what we are doing. Okay, guys, you notice this area on 25th October, the RSI had entered the overbought band. Now, what happened here is that once this RSI entered this overbought band, many people would have expected the market to go lower. But guess, unfortunately, what happened? The market from here started to give you a 3.94% move, which is nearly a 4% move, which is 1,610 points move. Now, those who had sold here and had their stop loss here might have got triggered. The stop loss would have got triggered and they would have suffered a medium loss based on their stop loss, what it was. But this is why I'm going to be, doing today's post-market analysis based on a confluences, based on the practice of confluence, right? Let me just get it started. So on the high time frame, you can notice that this RSI is in the overbought zone, but there is no clear indication yet that the market is going to go lower, because you see this swing high has been broken, right? I mean, not this is not a swing high. I'm sorry, this swing high right here, this previous swing high has been broken. The gap point between this current price and the swing high is nearly 833 points. Okay, so this swing high has been broken. Then you can expect the market to go higher. But now what I'm doing is that there clearly has been a swing low, which is right here. But you can, this thing is known as the swing low here. I'll put the other, I'll put the other line here, right? So this thing is known as the swing low, but this swing low too hasn't been broken yet. So we are basically, in a no trend zone. When the market entered this area here, it's been going on in some sort of a consolidation on the daily chart. So I'm waiting for a swing high to get created, which means a swing high is basically two red candles after a swing low. So if swing high is getting created on the daily chart, then I will be looking to decide my trades on the longer time. Now moving on to the 4-hour chart, right? The 4-hour chart, there has been no clear swing highs, and the market is also, showing some signs of strength in the bullish direction. So I think that the market will still go up on the 4-hour chart, preferably at least till this 42,545. This is my assumption, all right. So 4-hour chart, there is still no any clear indication. Swing high, this swing high, if you notice on the 4-hour chart, okay, so this swing high has been broken. After this break, it had a nice small red candle retrace, and it's starting to push higher. And then now this, the market came today to this previous swing high to retest it. Now I expect the market to go higher. Now moving on to the 1-hour time frame, it's basically, guys, in this 1-hour time frame, it's basically in some sort of a consolidation, big breakout, consolidation, and some kind of a breakout here. So the entire Bank Nifty market has been going in some sort of a consolidation for the past few days. For the past few days. So what is exactly going to happen again? For intraday traders. For you guys, intraday traders, I have this other plan, which is taking on to the 30 minutes time frame, right? So this 30 minutes time frame will tell you clearly what's happening. So look at this. This swing high has been broken. It had been broken. So this became a major zone for testing. And now when the market broke it, entered the zone back here again, the market started to go in some sort of a consolidation here, right? This entire zone, it's some sort of a consolidation. And this market had a breakout here, which is on 21st November, which is yesterday, right? So after I knew this, then I would have taken my buy trade, place my targets somewhere around here. My targets are going to be somewhere around here, right? So this is what been happening since yesterday. Now, mind the market may open tomorrow in a gap up or a gap down, and the market is showing the market is showing some signs of weakness here. The day is high. The market entered the day's high and eventually started to give a major wick, indicating some sign of a selling pressure. Now, most people will not be looking to buy at all-time highs. They would want a discounted price, which means price lower than this current level. So most people are expecting to go short here. Now, this is what happened on Twitter. Today many people are attending this tweet that the Bank Nifty possibly can be going down on the downside, because that is what the high time frame trend is looking at. I agree. Even I thought that the market is going to go down, preferably from this 42,500 area, but it's in some sort of a consolidation for the past 2 days, which is including today. Now there is no clear consensus of the market. So what are we going to do? We are going to be dropping another time frame below, which is 5 minute entry time frame, right? Let me just remove all this. Okay, so this is, I'll put a vertical line where the market started today. Now this vertical line is where the market started, which is 26th November. The immediate opening of the candle was a swing high today because it had two consecutive red candles followed by a green candle, and then we had a major swing low here today. So this can also be called as a support and resistance. Now what happened is that once neither of these lows were broken. These wicks were not broken here. So when these wicks were not broken, wicks got past this previous week, but the body didn't close below this previous week. So I knew that there was going to be some sort of a uptrend, right? I knew that there was going to be some sort of a uptrend today. Now, so what I did was that I waited for the market to have a retest on my level. So I expected the market to break a previous high somewhat here, right? I expected the market to break this high. Okay, so I expected the market to break this high, and after breaking this high, I expected the market to come down till here, which exactly happened. Is what I thought had happened. A nice wick to the downside, touching a zone. This is also known as a liquidation zone. Now, what this liquidation zone means is that these are where institutions would expect the market to go, move in their, to move favorably in their direction. So this is what happened. The market had a very nice breakout, right? Above the swing high. It had this awesome, a good breakout here above the swing high, and then a couple of wicks here, and then a nice breakout. Now, most people, what I did was that, I took my trade here and I expected the market to go till here, which is the day's high. Now, what happened is that if you notice this, my analysis was correct, which means that, I expected the market to go high till the touch the day's high, which of course happened on the later part of the day. But what happened is that I made this issue of my stop loss. I took this trade here. I usually like to place my stop loss somewhere around here, but I usually place my stop loss by swing lows, which would have been here. Since I thought that this is going to be such a small trade, why are we going to risk such a big, such high amount for such small returns? Not small returns, but medium returns. I wanted at least a 1 to 2 trade. So what happened is that the market, after I placed my trade, initially went in my direction, broke the swing low. I expected the market to go higher. And now I even thought of cutting my trade after this retracement candle right in this in this red candle, which is a retracement candle here, but it was, I somehow thought that the market is going to go higher, but unfortunately, the market took my stop loss out today, hit my stop loss exactly, and then went on a zoomed uptrend to the upside. Now, so my analysis was correct, my targets were correct, but my stop loss was not correct. This is the major reason why many people fail. They just say in the markets that bro, I can take my, I can find the targets, I can do everything, but the market hits my stop loss and goes towards my target. Now this happens, this happens because of a couple of reasons. Number one is that you don't know exactly about where to place a stop loss. Number two, either you are risking too much percentage of your account or too low percentage of your account. You must have a minimum, percentage to risk your account, which is depending upon your capital or depending upon your risk taking. Some people like to risk 5% of their capital, which is not at all advisable, and some people like to risk less than 1% of their capital, which is very much advisable by me. So most people, most traders, they make their mistakes on the stop loss here. Now this is what happens. So stop loss is a major part of the trading game. I suggest everyone to use the stop loss, and look what happened today. The market went in my direction initially, had some major consolidation, hit my stop loss, and then moved towards my target very fast. So this is what had happened, guys. I mean, my stop loss got hit, which is today, but you know, making loss is part of the trading game. But in the end month, your duty is to be profitable. That's your goal. That's going to be your aim. One day of losing is not a big deal for anybody. In the end of the month, you must be in a profitable situation. Now, this is what a trading motto is, right? So, going towards a pre-market analysis for 23rd November, I just remove all these lines, right? So, pre-market analysis, we got, I mean, in the what we saw on a pre-market analysis, right? Remove everything. Now, what about this was a post-market analysis till today. Now we are going to do the pre-market analysis for 23rd November. Okay, so one thing is clear: the market tested the high, went past it, but failed to break it. It had a excuse me, it had a major wick to the upside, indicating selling pressure, indicating that the sellers don't want the market to go higher than this price. They've had enough with the buyers and they want the sellers are trying to push the market down. Now, I expect a gap down opening tomorrow because of this wick, but I'm not sure about the openings. But I can tell you very clear what will be happening tomorrow. If at all the market was to, okay, so if at all the market was to, you know, how the market can be moving, right? So number one is that for a major downtrend, for the long-term downtrend, I expect the market to go for the downtrend, create constant higher lows, break this previous low, have a nice retest, and then two red candles. Then I'll take my selling trade right here, place my stop loss somewhere depending upon the candles which I shown that time, and then I'll take my targets here. Fair enough, a 4 to 5 risk reward. Or if at all the market was to open higher, then I will expect the market to push past this previous wick. Then I will expect the market to, break this previous wick, push higher, come down below the wick towards this body or somewhere around here, create a double bottom, and then expect the market to go higher because double bottom is a very unique and a powerful pattern if applied properly. So I expect the market to do this if for the uptrend. Now, this is what can possibly happen. This is the medium term trend. Now, I expect the market to go higher if this happens. So these are the two things which can happen. But what if the market opens in the same day gap, no gaps, no gap openings? If it opens like this, then I expect the market to break this. These are going to be my look levels. If the market, breaks this, I'll be breaking this, looking for some retest and then some trade here. So I'll take my sell trade here. Depends. It really depends on how the market is, and I'll place my orders here. I mean, not my orders, my take profit levels. And if the market breaks above this, creates a double top, then I'll expect the market to go below this and then create a double top again, go below this and take support here. Create the double bottoms, right? Create double bottoms like, wait a minute. How do we draw this double bottom? Okay, so create this double bottom here, which is right here, and then I'll expect the market to go higher. Now, these are the things which can happen. So, this is what can happen possibly tomorrow. Now, this is what can happen possibly tomorrow. So, this is very simple. I'm not going to be confusing you guys with complex support and resistance, complex supply demand, and complex order flow methods. I'm just going to be teaching you what possibly can happen tomorrow. Or the worst case scenario is that another day of consolidation tomorrow, which means the market just goes like this for the entire day, and then nice movement to the upside or nice movement to the downside, and then some consolidation again. Now, this is the worst case scenario which can happen, which is 3 days of consolidation, 3 days of losing for many traders. So, but I expect the market to go lower tomorrow due to the selling pressure. And if at all the sellers were to take control, then trust me, it's going to be a medium-term downtrend. Right? Of course, you must be expecting retracements on the upper or on the bullish or bearish trend too. But I've made the analysis extremely simple. You can even take a screenshot of it, and if the market goes, according to this analysis, then kindly do credit me, tag me in the Twitter, tag my Twitter account, which means I'll be I'll be tagging my Twitter account in the comment section. Now, this is what can happen. These are the only three ways which can happen. The first one is a bullish continuation. Second one is a opposite, which is the bearish trend, or the third one is the worst case, which is another third day of consolidation. Now, I don't expect another day of consolidation, but I expect the market to be in consolidation for a few minutes tomorrow or a few hours tomorrow, and then a major up or down trend. It really depends on the price action pattern. Now, note, guys, you can take a screenshot of this. I just remove the unwanted drawings here, right? I'll just remove all these unwanted drawings here. Okay, so these are the only ways which market can be going, right? These are the ways which market can be going. Now, this is clear-cut analysis of what the market can be doing. Now, this analysis can certainly be helpful for at least the next 2 to 3 days because I've said so much about it. Of course, it will be helpful only if the market, comes either here or here. Then the price action, then it's up to the price action patterns. Now, right? Take a screenshot of it. If it works, kindly do tag me in the Twitter. I'll link my account in the comment section below. Now, this is the end of today's pre and post market analysis video. And I hope you all like this video. If you like this, kindly do subscribe to our channel and then make sure you click on the bell icon and do like our videos. Thank you very much, guys. Take care.